Hello and welcome to Building the Premier Accounting Firm. I'm Roger Knecht, your host, and we're going to be talking about things that you need to be aware of as you're working on your business to, in fact, build the premier accounting firm in your area. Now, as your host, what I'm hoping to give you is insights into topics that range from marketing to selling, starting your business, growing your business, offering quality accounting services, and so much more. So I invite you to check in and listen to our various episodes as we interview and speak with the guests, the experts that you need to be aware of as they share insights as to what it is we can be doing to work on our business. Now, I happen to have a guest today that I'm excited to have. I've met her numerous times, and it's Rachel Fisch. Rachel happens to be someone who worked at Sage for a number of years, and after that has also owned and operated her own business and has a number of insights regarding starting or purchasing a company. So there's a lot that we're going to be talking about today. One of the things that she really has as part of her bio, let's say, is that she loves to live and work at the intersection of accounting and technology. So she's really big into such things as strategy, technology, and strategic partnerships. So we're going to talk about each of those here in the next little bit. So first of all, Rachel, welcome to the show.
Thank you so much, Roger, for having me. It's a pleasure to be here.
This is going to be fun. So Rachel, I've heard you speak. We've spoken. One of the things that I really was intrigued by is you do have a good deal of interest about leveraging strategic partnerships.
Yeah.
First of all, what does that even mean?
Oh, gosh. It's difficult to try to explain to other people something that comes really naturally just in the way that I work. Working with strategic partnerships or trying to look at multiple dimensions of relationships is something that actually has come very naturally to me throughout my entire career. And so when somebody talks about, well, how did you start? I'm like, this is just how my brain works. So here's how I would explain it is, we often look at relationships, especially in firm ownership, as, your customer, your client relationships, your team relationships, sometimes your vendor relationships. But I think what I'd love to challenge your listeners about today is, what if we could add an additional dimension to how you get clients, how you get team members, and different points of view around what vendor relationships could look like. So I think we're going to talk about that a bit today.
Oh, definitely. Well, what I would do to help define strategic partnerships is whenever you're working with someone, personally or professionally, and in this case, obviously, we're talking a lot professionally, is we're basically saying, what is it that I can do to help you achieve your goal, your purpose in being in business? What can I do to help you achieve that? But in turn, what is it that you're doing that also may be able to help me? Which is to say, if I'm working with a financial planner and I see that they have business clients that are owners of businesses that would like to be better on top of their accounting and finances, that financial planner may very comfortably want to refer those contacts to me, and vice versa. If I'm working with business owners and they're having success and they're making money and running successful businesses, I in turn may want to refer back to a financial planner, my business owner clients, because they're going to help them manage their wealth, diversify what they're doing, and be able to kind of reap the rewards of the successes they're experiencing as we're working with them as an accounting professional. And the cycle goes on and on. You
Absolutely.
can do it with merchant account providers. You can do it with software companies. It's just going into relationship with the intent of how can I help them, and conversely, how can they help me? How does that sound?
Absolutely. And I think you nailed kind of the key there in terms of it does need to be mutually beneficial.
Yes.
Right? Something that helps you grow or benefits your business, as well as something that helps whoever it is you're partnering with grow or expand their business as well. And I think that's when both sides can get really excited about the possibilities there as well. And so actually interesting that you brought up the exact example of, looking at those financial planners.
Yeah.
So when I first started my bookkeeping practice in Brandon, Manitoba, back in, I think it was 2011, because I was just coming off mat leave of my second daughter.
Okay.
And I instinctively, started thinking about, who is in my ideal client's network, right? So it wasn't just about the who is my ideal client, how might I attract them? What's the market opportunity? All of those, again, very kind of one-dimensional thought process that you go through when you're creating a business. But it was also that next level of, well, who does my client do business with?
Yep.
And so I need to be connecting with those people. Brandon, although it's the second largest city in Manitoba, to me, it still felt very much like a small town. I'm from Southern Ontario, the GTA, Golden Horseshoe. And so it was still felt very small to me. And so I knew some of these, I guess, ecosystem partners, not in the app sense, but in the, in that business ecosystem, that business network world of those clients. And so I knew contacts in this area. So they were actually the ones that I reached out to, even just to test my business plan and my business model in terms of, here's the service that I think is needed. And essentially, I now know, after being a product manager at Sage, it's I needed that validation. I needed them to validate what I thought the gap in the market was, right? If we want to put it into marketing speak. And so these are the services that I can provide. Here's what I'm seeing as, again, that gap in the market. Do you also see, a similar gap? And it was overwhelmingly yes, because no matter how many bookkeepers and accountants are there are still way more small businesses than there are accountants and bookkeepers. And so there are always businesses that are looking for those professionals. And so it was overwhelmingly yes. And so then I, got to talking about, what about your clients? Might your clients actually be in need of someone and that we would be able to refer to? Or is there, a newsletter that you put out that I might be able to put some tax tips in, right? So again, making sure that mutually beneficial part stays key, as well as, thinking that additional dimension of not only who my client is, but who does my client interact with?
Yeah.
Now, where that can also really get supercharged is if you then have a highly niched firm where it is, much more specific who these types of people deal with. There are vendors that are in only specific industries, not your, general lawyer or general accountant or, general practitioners, but who serve only, the media production industry or, any other kind of specific industry like that. So yeah, that was the intention, was to look at all of those different dimensions as well.
So what we're discussing here are a lot of strategic partnerships that relate to marketing and getting clients and having that synergistic relationship to help them and conversely help us. One of the things that stands out to me is I mentioned myself, this financial planner. There's the merchant provider that's doing the merchant services. It's the business specialist at the bank that deals with business owners. It's essentially, who are these people that likewise work with the business owners that don't offer accounting services, that have accounting conversations and need to have someone that they can refer people to that would definitely benefit from the services that I offer. So that's a definite marketing strategic partnership. But you're also a passionate person about technology. So what's a strategic partnership when it relates to technology?
So when it comes to technology, then, I love talking about this stuff, Roger. It's like, like that, if you can be a nerdy accountant and then a nerdy technology, that's me. I am nerdy squared. So when it comes to technology, I think it's taking a look at, often you can see clearly, especially, in terms of marketing content and things like that, bookkeepers and accountants that do content on behalf of a vendor. And that's kind of, again, almost the most simple, the most straight line kind of, partnership that we're looking at. We're clients, they're vendors. We then assist them with content. The benefit for us is the exposure, so that we can get more clients. So again, we still want to keep that lens on mutually beneficial relationship. But I think that there are, again, more opportunities to take a look at different kinds of technology partnerships than just that kind of customer vendor relationship. So not only looking at the technology kind of within your accounting workflow. So we've got, all of the apps that we use to serve our clients, but also elements that are peripheral to your workflow. So we've got internal and external tech stacks, right? The external tech stacks, those are the tools that your clients love and that they use. So whether it's auto entry or HubDoc or Dext, those kinds of things, again, very kind of front of mind in terms of getting clients. But then what about things kind of behind the scenes, the things that only you use within the formation or within the organization of your practice? So what are ways, for example, that you can stay up to date with new technologies so that you can really support and partner with those that you believe in? Could you maybe start teaching some deep dive courses on that technology to your peers? What if you could become, an implementation partner for a software that you love, where you can actually be that source? Again, if we look at diversifying your streams of income to not only serve clients, but also to teach it and implement it to other firms, so that you can even start to look at those referral relationships or those strategic partnerships, even with other firms. And I think that one of the most excellent things about kind of the cloud accounting world, and it honestly has been like this ever since the beginning, I feel like I was around at the beginning, is the level of community of those practitioners who use cloud technology. There is, in my opinion, at least, far less of, my peer is my competitor, as much as my peer is just a different level of partner. Whether it's, we have different industry verticals, right? We have different industry specialties. And so when somebody comes to me, I think the last example I used was media production. I don't do media production. So if somebody comes to, hears about me, I'm going to refer, Tate Henshaw, for example, right? Somebody that that is really going to take care of them far better than I could. So that's where, again, you're seeing an additional dimension to the technology partners or the tools that you love using, and are able to turn it into income, or are able to turn it into a mutually beneficial in a new way.
Yeah, what you're doing is you're leveraging these relationships that you have. You're not just using a product or a service, but you're finding a way to now leverage it. So let me back up with a few of the things that you said just a little bit ago.
Sure.
You talked about being a contributing author, writing content for some of these technology companies. I like that one, and it's done quite often. It's basically, I'm going to be someone that's writing content for them, and as such, then as part of my credentials, I'm able to say I'm a contributing author to one of these platforms. And as such, you're getting the credential that you're an expert in that field. And as you're out
Absolutely.
marketing your services, you can say, well, I'm actually respected in my sphere, in my profession, because I'm actually not just a professional, but I'm literally one of these leading people that's kind of leading the conversation, because I'm writing this content for these different platforms and I'm perceived as that expert. So all of a sudden you're elevating yourself, and it's kind of a nice giver's thing. You're helping that technology company, providing the content. You're probably now validating their platform, and then at the same time you're getting that credential. The other thing that I also heard you talk about is then becoming an expert, that you started to help your peers. So doing these tutorials or trainings and helping people actually see that you can help them. Well, honestly, if they're having problems or difficulties implementing that platform, that technology with their clients or within their business, they may in turn reach out to you and pay you fees for services related with them implementing or utilizing that, because they see you as that expert and that wonderful resource. Am I illustrating this well?
You're illustrating it beautifully. Honestly, that's wonderful. I think that Hinge Institute does a phenomenal job. And I believe they also have a podcast called The Visible Expert. And so it really talks a lot about all of the different ways in which you can essentially set yourself up as an expert in your field. And of course, that's when you attract vendors, you attract clients. It becomes much less of an inside out marketing effort and, starts to flip to more of an outside in marketing initiative as well. But yeah, no, absolutely. You said it perfectly, of course.
Thank you. Well, the other thing that I would add to this is it's BNI. I don't know if anyone's really familiar with them, Business Networking International. BNI has a motto, it's givers gain. And I think it applies here. It's basically,
Love
if
it.
you're in that mindset of what can I do to help those that I'm working with, all of a sudden there's a reciprocity that begins. It's like, well, this guy helped me, this person helped me, I'm going to help them. And you gave the example of the video tech. You just dropped his name. You obviously are using their services. Well, they're likewise going to be working with business owners. And anytime that they hear somebody needs some bookkeeping services, they likewise are going to reciprocate because they know that Rachel loves them. Well, I've got to reciprocate that love. I've got to give that love back. And all of a sudden, they're now mentioning you, your services, giving a testimonial, if you would, of what it is you do, and you're going to start getting the referrals there. So again, this element of strategic partnership. So I like it. Is there something about strategic partnerships that we've not discussed that I'm overlooking that you feel we should mention?
I've spoken on this several times in, conferences and webinars and things like that. And we kind of walk through all of the different kinds. I don't want to do that. I don't want to take my time with you to, do a conference session. That would be boring to your listeners.
Don't want
But
it.
what I will say is I would encourage them all just to, again, add that additional dimension to, the different relationships that they already have. I also think the more you formalize it, the less authentic it becomes. So, I've worked with, lots of people over the years, and they're like, well, then let's put in a contract. And like, no. If I love your product, I'm going to recommend it. If you think of somebody that I would be a good fit for, refer them back to me. But I feel like the more kind of formalized the relationship gets, the more it becomes a quota and there's something inauthentic or disingenuous about that. So, just again, add that other dimension. Think about other ways that you can leverage the relationships, make it mutually beneficial, and just be authentically you.
Thank you for that. The formality of like an affiliate program. There's context for that, and there's
Sure.
places for that. But I like how you just said, let's just keep it authentic. Let's just keep it simple. I like what you do. I like who you are. I just want to send people your way, and let's just be genuine about this. And in
Yeah.
turn, I'm just asking the same. So nothing too formal. There's maybe not even transactions going on. It's just the fact that you're helping them, and they're in turn helping you. So there maybe what we're describing here are two layers of strategic partnerships, something that's informal and one that's formal. So that's helpful.
Yeah.
I'm going to switch gears on us here.
Sure.
I know that you have a good deal of perspective on running a business, a bookkeeping business. We started today's conversation about marketing strategic partnerships, which obviously entails growing the business and getting clients. But you also have a perspective about not just growing a business internally through marketing and sales efforts, but you have a perspective about also purchasing bookkeeping businesses and acquiring a company. Tell
Yeah.
us about that. I mean, that's definitely a different journey. What insights could you provide about that experience? Let me just start with, why did you choose to
Sure.
buy a business rather than building one?
Sure. So first of all, I will absolutely acknowledge it is a whole other ball game, Roger, between building a business and acquiring one. So first, I will say that the experience that I got in acquiring firms was not only, it was, on the outside looking in, was just paying attention to the trends and what's going on in the accounting and bookkeeping industry. I feel like, they are not exclusive to each other. One always informs the other one way or another. And so previously, it was kind of odd to see bookkeeping firms, start to acquire or merge with other bookkeeping firms. But it was something that accounting firms have been doing for ages, right? I mean, this is how the Big Four got to be the Big Four. They just gobbled up all of the regional firms in the areas they wanted to be in. And so, so that was really interesting to me, starting to see that trend. It was the complete generosity and faith from Liz Mason, who, I had known for years, but then I was at Sage. I never thought I would go back into the practice world. And then she called me up. And of course, it was like, yes, of course. What can I do with you? How can we work together? And so she gave me the space and the grace to learn. So the role that I actually came into was focusing exclusively on acquisitions. That was my job, was to figure out, High Rock Accounting out of Scottsdale, Arizona. Who are the types of firms that, that we should be expanding with or that we should be purchasing? And so going through, first of all of that market research, who's for sale, who are the other buyers out there? So who's my kind of competition on the buying scene? And then which firms fit within our strategic planning. So it had a very unique focus in terms of with the industry vertical strategy of High Rock Accounting, wanting to build it almost like multiple niche firms, but within one overarching accounting firm. And so we specifically wanted to grow in e-commerce and nonprofits. And so that I felt was my mission. Who are the e-commerce firms out there? Who are the nonprofit firms out there? How can we, start relationships, of course, back to relationships. And then how can we secure some of these acquisitions? So it was honestly her generosity that allowed me to learn all about this stuff. But along the way, absolutely, what do we need to be doing in-house as buyers? What should the seller be doing in-house to be an attractive sale? First of all, I would say documented processes, right? Buyers buying a client list in a service business is probably the least valuable thing about the firm. If I can be completely honest.
No, that's very true.
Buyers buy systems. Buyers buy productized services. And I could go off on a whole other tangent on productization. And then now, especially with how difficult it has been to staff, right? To find resources, to fill spots. Buyers buy talent. And so as a seller, if you can, systematize or productize your offering, right? Make sure that you've got those documented processes, make sure that you have a very clear tech stack and that all of your clients are within that very clear tech stack, and that you have strong talent that would be attractive to a buyer. That is a really great mix that would be very attractive to a buyer for sure.
You've touched on a few things here that I wanted to address. One
Absolutely.
of which is evaluating the valuation of the business. How do you determine what it's worth? And I loved how you started off by, first of all, saying it's not your list. And I think that's very true. The second part is you did address the processes and the talent, very spot on. I want to go back real quickly, though, to the client list. I mean, there is obviously worth in the fact that these clients are paying for services. The thing I would add in here, and I'll just see if you have any comments regarding this, but I would add, first of all, there's a distinction between a customer and a client. A customer happens to be someone that may be paying you periodically once a year. There's just not an ongoing relationship with them. A client is someone that you have a recurring relationship with. And I think when evaluating a business, it's important to delineate, okay, who are the clients that are on this list that are paying me recurring monthly services? Who's this one-off that I did work for this one time, some project? You've got to distinguish between those two and see how much revenue is literally coming from clients versus revenue coming from customers. The second thing that I would add is then you also want to hierarchy your client list. We want to see, okay, how many of these are A, B, or C clients? A clients are, and I'm just going to give you a rough estimate here. So for the listener, I don't want you to write this down as if it's codified, but it'll give you a good perspective. A clients are generally those that you've had over a year relationship with that are, let's say, paying you over $1,000 a month. B clients may be long-term clients in the sense that you've had them over a year, but they just don't pay you the larger sums, say less than $1,000 a month. C clients are anyone that you've had less than a year, and therefore you're still establishing a relationship. And arguably, if you buy the business, you're going to lose those specific clients first because there's no loyalty to this company you're acquiring. And so to, first of all, rank those lists is very helpful. But again, you said it best. That's the least valuable part of this entire thing. We're looking at the processes and the talents. So is there anything more you would add to the valuation of a firm as you're looking to acquire them?
Yeah, that's always the big question, right? Like, what did you pay? What was your multiple?
Well, it's how did you figure it out? How did you come to that amount?
Yeah, and I mean there are lots of costing methods, that go into a valuation. In Canada, we have a specific designation around that, CBV. CBVs are specifically trained in, the tools of valuing businesses and things like that as well. So what I would say is you were bang on with the recurring piece of it, right? Monthly recurring revenue, MRR, is far more predictable and valuable than, a client that you only charge once a year. Now, not to minimize, okay, I am trying to minimize it. That's exactly what I'm trying to do. So there will always be project work. There will always be cleanup work. There will always be additional revenue outside of MRR in any kind of firm. I mean, it's just kind of a fact of the service, industry that we're in. But it is far less predictable, and buyers want predictability, right? This is why they want systems. This is why they want strong talent, is because they want a predictable outcome. And so, although there will always be, again, those annual type clients, I like that you refer to them as customers as opposed to those ongoing recurring clients that you do have a great relationship with. It's just not at the same value. And another tip that I didn't really touch on was the more involved the owner is in the business, the less especially if the owner wants to leave. So if you want to sell your business and then go live on a beach somewhere, the more involved you are in that business, the less attractive it is to a buyer, because that success of that firm is tied to you. And if you want to leave, that again, it creates an unpredictable circumstance where it's, well, then how many of the team are going to leave? How many of the clients are going to leave if the owner is tied too closely to this? So again, we could probably do like a whole episode on some of this deep dive, but yeah, just some tips for the sellers out there for sure.
So we're going to really go deep here real quick. And if we want to go deeper, we can still. So you brought up in passing, you just mentioned this in passing. And I wanted to point this out to listeners, a CVB. Can you tell us what that is?
CBV. I'm trying to think of what it's, Certified Business Valuator.
Yes.
And it is, so there's actually a CBV Institute. And it is, I did find out, Chartered Business Valuator is what it's called. It is a Canadian designation. So I was trying to give somebody in the US a tip on, like, just go find a CBV. And they're like, a CVS? What? Like, no. And then I realized that they aren't actually in the US. So in Canada, there's something called a CBV Institute. And so you can find accountants who are also CBVs. And so this is their expertise, is these business valuations. Also, of course, working with brokers. So for example, like the Poe Group advisors, they have tons of experience because all they do is buy and sell accounting firms and bookkeeping firms. And so I think having somebody with industry experience that knows not only your business, but also the industries, what buyers and sellers want out of the deal, is really critical to a successful transaction. So much so that I decided to buy one myself.
That is amazing.
So it is a very, I've built a business before, right? I mentioned, coming off of mat leave with my second daughter. And in that case, So I had the luxury of time in that I was supposed to be on mat leave. So while I was on mat leave, I was, doing my business plan, doing these interviews that I talked about, with the small business ecosystem. But I also had to get up and running and revenue positive very quickly. And so I, as most, solopreneur bookkeepers do, start taking on all clients that come my way and building my tech stack as I needed the tools, right? Which is kind of like building your bicycle as you're riding it, or building your parachute as you're jumping out of the plane. Yep. it feels that dramatic sometimes. So although I had time in terms of I was on mat leave, and then I needed, was building this business, when it came to actually being, revenue positive, I had a very specific, it was like my EI ends or my mat leave benefit ends. I have to be making money on this. And so there was that pressure. In this case, it's a very different thing because I do feel like I have time. The sale date is something that we've been working on, since late spring, really, like all the way through. We finally have a sale date. We have now closed the deal. The announcements, you've probably seen them by now on social media and things like that. But I did have that time between when the conversation started, as the purchase agreement is getting hammered out, as I'm securing funding and all of the things to make it actually work. All during that time, I'm setting up my CRM. I'm building my proposal templates. And so I felt this time like I had much more the gift of time to really have a strong foundation before getting fully started. And so that's been phenomenal. I think in this case, it was also a really unique proposition because, as I mentioned earlier, it's a highly niched firm. And so it becomes very clear it's not about marketing to everybody. It's about, I even mentioned starting to look at strategic partnerships already, and I can do that because it's so highly niched. I can look at, we're focusing exclusively on real estate agents and real estate brokers. So I can then look at who are the associations, who are the organizations, who are the boards, across Canada that are in the real estate agent and broker world, and start to build those relationships even before our close date. So it's been a very unique experience, but I definitely had the gift of time to go with that.
Well, I like the perspective that you gave of the difference between building the business and acquiring a business. It does give you kind of a jump start, but also, as you said, some time to really look at what you can do to work on the business. And I like that perspective. What advice would you have for someone who is considering or going to go into that process of acquiring or purchasing a business?
Sure.
Do you have any lending advice?
Yeah.
Do you have any advice on relationships with the current owner who's going to be the past owner? What advice do you have there?
So, I think that relationship is really key, and you can discover quite quickly early on, that first or second phone conversation with them about if this is going to be a good fit. It's almost like, I I think it's almost like starting a relationship with a divorce. It's like, if you think about, if you thought your husband was a jerk while you were married, wait until you divorce him, and then it's like a disaster, right? Well, in this case, you are creating a relationship with someone whose whole intention to connect with you is to, take something that they no longer want for whatever reason so that they can go away. And there are some sellers who want to stay in the business. There are some where it's more of a merger where two people come together, they complement each other's skills very well. And so you end up becoming partners. There are lots of, sure, it's a transaction, but at the end, it can have lots of different outcomes. And so in this case, this is a relationship where I'm, coming in as owner. And, we'll probably see an exit of the existing owners pretty shortly here. But it's been really, really interesting to build a relationship solely on I'm going to take what you have and then you're going to go away.
That's right.
So being aligned in vision about what you both want out of this, being aligned in the way that you work, like even though it could be viewed as a baton handing over from one to the other. And so why do I care how they work if I'm going to be running this and they're not going to be here? You know why it matters? Because the clients are used to the way that they work. And unless you have a solid understanding of what they do and how they do it and why they do what they do, that transition may be really painful for those clients. And you may see some attrition happening because of that as well. So it is important just to get really connected with those sellers. I think the tech stack is critical. I've seen, the least successful acquisitions, especially if your goal is growth, is where, a cloud firm that comes into a more traditional firm, desktop, very paper heavy, and, they're going to come in and save the day and transform them and everything's going to be beautiful. Those are one of the most difficult transitions to make because you're changing the way that the team members work. So are they going to stick around if you're changing everything that they do? You're changing, the entire expectation for the client. Are they going to stick around if you're changing everything they do? So having your processes as aligned as possible, having your tech stack as aligned as possible will really go a long way to a successful transaction and transition for sure.
Yeah, I think you addressed three very important parts of this. One is the technology. I would agree, as you're looking to acquire a business, are you familiar with the technologies that are being used? Are you able to comfortably step in and begin using those? Or is there going to be a learning curve on your part to actually utilize what the processes are in the company? Yeah. The second is the culture. I think this one's often overlooked, but really the culture is, if you've got, like you were describing, a remote work environment and you were looking at a more traditional, everybody comes to the office, you're going to be butting heads with the employees already.
Absolutely.
And if you've got maybe a little bit more free flowing, just get the job done, or am I a 9 to 5 person? Do you like to micromanage, or are you very autonomous? I mean, there's a cultural thing that you're acquiring. And the easiest way I've ever found to describe it is it's like adopting a bunch of children. And not that the employees are children, but right. Imagine, this person already has their family routine. These children have their sleep, when they go to bed, when they get up, they have their meals, what we like to eat as a family. And when you're adopting these children, they're coming with a lot of these things already established. They've got their routines in place, and to presume that they're going to quickly conform to your way of running the household is a lot to ask. And so as you're adopting them, you've got to realize you're getting all of these things. This person leaves Friday at noon, always, period. It doesn't matter what you think. They're leaving. They've always done it, and they're going to continue to do it.
Yeah.
And so it's basically accepting that you're acquiring a culture that you've you've had no influence on, right. And how much influence you're going to have is still suspect. Now, that's not to say this is always problematic. You can usually find a great culture, one that you would love to be a part of. And if you were to be employed, you would find it very fruitful. You're just acquiring it as the buyer, and that's what you're looking for. But the third thing I wanted to mention, and you alluded to it, but I wanted to go just real quickly a little deeper,
Sure.
And it's the relationship that the owner's going to, the current or soon-to-be past owner is going to have in the business moving forward. Obviously, you could become partners, and through the acquisition, you're now co-working within the business, and you're working as business partners, and there's no intention of them leaving, and that's amazing. You're going to leverage each other's strengths and grow the business that much larger. The second is the business owner is going to transition. They're going to stick around for a period of time, try and help with client relations and retentions, try and help with client workflow within the business. And so that transition's helpful because there's this handoff, that baton that you were referring to. The third is the business is basically mentally and emotionally done with the business. They want the transaction. I want out of the company. I have other plans. I need to go on vacation. I'm out of here. Or maybe it's, they've got maybe health issues that they're trying to address.
There's lots
the point
of
is they can't stay in the company, and they won't. And so the moment the transaction happens, it is your company. And they may be a phone call away, but the point is they're not coming to work every day. And so they're not transitioning, and they're not sticking around as a partner. They're gone. And so those are the three common scenarios that exist as you're acquiring the business. And you just need to identify and be very candid with the current owner. Which is it that they want, and what can you expect out of this relationship? And that helps with the negotiations as you're having those, as you're looking to acquire the company. Um, Lots of gems in this. This is a great conversation.
Yes.
The other thing that I wanted to bring up is, with your perspective of running a business and getting into tech stacks, what advice would you have for just owning and running a bookkeeping business? Just generic advice.
Yeah. I like to say it as identifying and removing friction. And I feel that that concept can just basically be applied to anything that you've got going on in your firm. So, how easy is it for a client to find you, whether it's through marketing efforts or through, referrals? How easy is it for them to either set up a scoping call or to jump straight into like an onboarding form or even a client qualification form, right? If you need to weed out some clients, how easy is it for them to start doing business with you? How quickly can they get a pricing quote from you? And so anytime you have that, so it's right from, as I said, the very, how easily can they find you, all the way through to how easy, if the relationship does not work out, how easy can they leave you? So that entire process on the client side, and just going through and removing as much friction as possible. Same with team members. How easy is it? What does your hiring process look like? And how can you smooth out or remove friction from that hiring process? Right from I'm submitting my resume, or I'm, booking a call with you, all the way through to an offer, to your onboarding, to how do they do expense reports? How do they request time off? And then again, like for every other thing that you use, there are, if you can identify all of this friction, remove it, whether it's through process or through technology, and then have a really nice, smooth running system. I think that's everybody's goal, right? That's the, that's the holy grail, is to, have a smooth and frictionless system. But if you think of it in terms of, where is there friction here? Where does it feel like it's harder to do something than it should be? I think that that's a great opportunity to improve process or to introduce some tech there.
Perfect. This is really good. I I take what you have, and it relates very well to something that we do with all of our accounting owner clients, and it's referred to as mapping the business.
Yeah.
And it's this idea of removing friction, as you were describing, because as these three elements of the company work together, you find the profit. And the three elements are marketing and sales. It's everything you're doing to grow the business and get the clients you want. The second is accounting. It's the services you're providing. Are you doing bookkeeping? Are you doing bookkeeping and accounting? Are you doing bookkeeping and tax? Are you
Yeah.
doing bookkeeping, accounting, tax planning, and tax preparation? What are the services you're providing? And earlier today, you were talking about the pricing and bundling and so forth, and I want to get to that.
Sure.
But the third element of this is, once you're marketing and growing the business, once you're offering quality services, it's the efficiency, the production of which you're now able to do the work that determines whether or not you're profitable. And if you're dealing with a lot of friction in the selling, the onboarding, the fulfilling, you're not going to be as efficient, therefore not as profitable. And so as the owner, you need to look at all three of those elements of your business: the marketing and sales processes, systems, all of the accounting related services that you're providing and what that looks like, what's the client getting from you, and then the means or the ways in which you're going about performing those things on a recurring basis. That's your business. And when
Excellent.
we chunk it down to that simple formula, business owners have a lot of epiphanies, get a great deal of clarity as to, well, this is what I need to work on my business. This is what's next. This is where I can have the biggest impact or improvement. This is what can deliver more to my bottom line. They really get excited about this concept of mapping the business. And that's what I was hearing as you were describing, removing the friction. So that's
Yeah.
really well said. Um, my question that I wanted to ask is, very early on, you brought up this idea of pricing, bundling, packaging. I wanted to revisit that.
Yeah.
What were you alluding to? What were you meaning by that?
So, you may know, I mean, we've known each other for several years. I sometimes like to stir the pot and have an unpopular opinion once now and then. So, the concept of productizing your service, right?
Mm-hmm.
Has been, I mean, it's been talked about, within the industry for a while now. This is not a new concept. Here's what I think is the challenge behind that concept is that when I read, the articles or the content or, hear the podcast, when they talk about productizing a service, they typically, I'm totally generalizing here, but very often they begin and end with the sales process. So it is about creating 3 packages. It is about creating 3 prices, and it is about making the buying process as simple as possible for, the client. I do not disagree with that. Here's where I think we can take that and take it a step further is that if you are looking to productize your service, which allows you to more easily sell it, you also need to prepare to be prepared to productize the delivery of that service. And so I feel like by focusing exclusively on what your packages are, what your pricing is, how you sell at the very beginning, but without taking that concept of those 3 packages all the way through your production team or, your accounting and bookkeeping team, now how do we do the work in a way that reflects clearly the price point and the service that they've purchased, right? So do we do the work slightly differently between those 3 packages? Do we do the work identically the same, right? At least having those conversations or asking those questions in terms of what that looks like. And then all the way through to the client delivery. So what this means is that whoever is doing your selling, at the front end, which very often is the owner, but again, you got to get out of that business if you want to sell it. So getting somebody involved who understands enough of the service to be able to have a conversation about it. They do not need to be accountant or bookkeepers themselves, but they at least need to know enough about, the service to be able to sell it and its benefits. So whoever is having that conversation needs to understand not only those packages, but then what it is that the client is getting out of it, right? What is the deliverable on the client? And one of the things that, in one of the firms that I worked at, one of the challenges was we were using all of the team members to deliver all 3 of these packages. And so what ended up happening was, so as humans, we like predictability, especially as accountants and bookkeepers, right? We're predictive by nature. And so we like to kind of have common, things that we do all the time. And so what we found was that the clients who had purchased the lowest package were getting overserved, and the clients that had bought the top package were getting underserved because we were using the same group of people to deliver all 3 packages. And so there was a disconnect between how the service was productized, right? And how it was sold at the front end through to how the work was actually being done, through to what was the consistent deliverable that we gave clients who purchased each of those 3 packages. And so again, I don't dislike the analogy of productizing your services, but what I'm saying is you cannot stop that concept at the sales methodology piece. You have to feed it through your entire organization in order to really be delivering the service that your clients are paying for at the price point in which they are paying them.
I am so happy you've brought this up. This is
Really?
something that I've discussed. Yes.
Are you
I'm actually disappointed
too,
we're
Roger?
running out of time. This is great. So let me try and not only summarize, but add a little bit to this.
Sure.
So when talking about pricing, there is this productization that you're referring to, and
Yes.
it's typically coupled in what's referred to as menu pricing. Menu pricing is generally where you'd come up with 3 packages that you would offer your clientele, and they're able to select from this menu pricing which package or bundle best meets their needs. Now, in doing this whole process, what you're describing is very well said. You're just essentially describing what are the features that are making up each of those bundled elements. So you've got these 3 packages, your gold, silver, whatever.
Yep.
And what we're trying to do is we're trying to say these are the deliverable services that we're providing. The checkbox, we gave the financials, balance sheet, whatever. Now, the next thing is, and this is where I'm adding to your point, is you need to then identify with each of those features what the client is paying for, a very clear, distinct benefit. What are they paying and getting? Because they're not paying for a P&L. They're
Right.
looking for something very specific. They want to know, do they have a good ROI? Is there profit for the month? What's that deliverable that you need to be communicating to them rather than just giving them the report and handing it to them? So there's that benefit. And what is the emotional tie to that? Why are they happy that you did it? But then you said it very well. What's your process to now deliver that? What's the time commitment on you and your staff's part to now fulfill that? What can you do to streamline that to be more efficient so you can increase your profit margin for the time you're spending delivering that product? But I'm going to take it one last step, and
Sure.
it's then to ask yourself, in what way can you over deliver and exceed your client's expectation when delivering that package? And if you can go through the process of literally describing the features associated with that package, the associated benefits, the processes, as you clearly mentioned, are so important to understand as to fulfilling that, and then identifying, well, how can we better deliver this? Do I just print off this P&L on a very simple paper and deliver it in the mail? Do I put it on nicer paper? Do I put it in a folder? Do I deliver it with a cover sheet? I mean, how do you over deliver
Yeah.
what it is you're doing? Do you actually sit down with the client with the P&L highlighted, with the balance sheet highlighted, with ratios identified on it and showing trends? And do you do a bar chart and a pie chart to illustrate and visually conceptualize these numbers you're delivering? What can you do to over deliver what it is that they're expecting? This conversation is huge, and I'm sorry
For
we're out
sure.
of time to actually dive into it, but what do you think of that?
So you have been phenomenal all podcast long in summarizing and taking it just that one step deeper, which I think is phenomenal for your audience. So absolutely excellent job. Yes, you nailed it once again with this productization, but that's exactly what I was getting at. And I think that, again, I feel like, accountants and bookkeepers, even if they're trying to adopt the concept of productizing the service, following the guidance that's out there, again, we can take it that much further by considering it through your entire process. So yes, absolutely.
Thank you. Last question, and then we're going to wrap this up.
Oh, I'm sad.
I know
great.
it's coming to an end, and there's still so much we could have discussed.
Yeah.
All right. So I'm curious, with your perspective and insight, what do you think is on the horizon for us as accounting professionals? What's the next change or evolution that we should be paying attention to or being aware of?
Yeah. Well, I think that, if the pandemic wasn't not bad enough, but wasn't impactful enough, now we're facing recession, whether it's officially in a recession or not. You are certainly seeing those types of activities happening with increased interest rates. You are seeing, every day on LinkedIn, I'm seeing another 1,000 employees from a tech company get laid off, or, tech companies that are having trouble raising their next round, and that, could put their longevity in trouble. And so I think that paying attention to, the world around you, and whatever impact you are feeling, your clients are feeling that, plus the burden of them owning their own business, and them having to provide for their, team members and ensuring that they stay employed. And so I hate to use those cliche, now more than ever, but it's just cementing that relationship with your clients and being that advisor, right? Giving them that advice that they need, making sure that they understand what's happening in their business is absolutely critical when, we're all going through kind of a tough time right now.
Well, thank you for that. I would agree with your perspective. I'm going to start this way. One, it's a testament to why accounting is the second oldest profession.
Yes.
It's the fact that it's always going to be here, and it's because economies and businesses change. And that brings me to my point to say, even as you're describing a recession, we're dealing with supply chain issues, we're dealing with
Absolutely.
inflation, we're dealing with recession. Our clients are needing our help to navigate these things and make
Absolutely.
business decisions. And the more informed they are with the accounting information we can provide, timely accounting information, thorough accounting information, that is then what allows them to make informed business decisions to run their companies. And so we're that much more critical. They're that much more dependent on us. If there's ever a testament as to why what we do matters, I think that right there just proves the point that the economy, the business environment is ever changing, and we're just that much more critical to help our clients survive and navigate these various storms that come about. So thank you for that
Absolutely.
perspective.
My pleasure.
Here's what I'm going to do.
Yeah.
I'm going to wrap up these things and just give a little bit of a summary, if I may, and then I'm going to ask you for a closing thought and just
Sure.
kind of put a nice little capstone on this. So real quickly, as a summary, before I begin that, I just want to point out as an offer, you can go to the episode description, and in the episode description, you're going to find some highlights of things that we've kind of mentioned here in the conversation. I'm going to be putting there a link for a book that is called Red to Black. It is a turnkey guide for accounting professionals on what they can be doing with their clients to take them from red to black. It literally is helping you become, for your clients, a profit and growth expert and enable you to do an engagement with them beyond just the accounting services you're providing, and literally help them turn that business around and get them back into the black as they deserve. The second thing I'll be putting there is, we were talking earlier about valuations and how do you determine the worth of a company and so forth. I happen to be a certified value builder provider. It's based on the principles taught by John Warlow. And in that certification, we talk about 8 drivers that determine the worth of a company. So I'm going to invite you in the episode description to go get your business score. And with that, I'll be able to provide to you a report telling you exactly what your firm is worth today. And it's referred to as an initial valuation. Obviously, it's not an actual valuation in the sense of looking at comps, taking your financials and doing any of that deep dive. But as an initial valuation, it's looking at your business model. It's looking at your business as it's set up through processes and systems, as we were discussing earlier. And it's literally able to give you a dollar amount worth for your company. And I'm going to invite you to get your business score. Now, with that being said, as a summary of our conversation today, one of the things that I want to highlight is the fact that Rachel's been doing a great job of helping us understand strategic partnerships. If we have that giver's gain mentality that I mentioned, it allows us to actually see what we can do to help those contacts that we have, and perhaps build or formulate golden goose opportunities where we have a reciprocal relationship of, they work with business owners, we work with business owners. The services we provide are each unique, but yet we can basically refer one another. We talked about informal and formal strategic partnerships and how those differ. We also spoke of technology companies and how we can partner with them and how that can actually help elevate our status as being experts in the accounting profession. Lots of great information here. Obviously, with Rachel's perspective on buying a business, we talked about what those things are that you're purchasing, what really has worth in the company. I liked how we just simply identified it's not just the client list, it's more importantly the systems in that company and the employee, the talent that you're acquiring. And we talked about the relationship you may have with the business owner in that transition. Are they sticking around and so forth? So many gems here that I thought were very, very helpful and applicable. And we ended on a high note of basically the productization of our services and what that really looks like, and how we really should take that through fulfillment in our firms and see how we're delivering to make sure those that are paying for quality services are receiving those, and those that are paying for our lesser packages are getting what they deserve, what they're paying for, but definitely what they deserve, and we're not confusing that internally. So all of those great topics were addressed here, and I obviously want to thank Rachel for her contributions there. Excellent insights. So Rachel, what last thoughts would you like to share?
So I think that one thing that might have gone under the radar, but was clearly consistent through everything that we talked about, is authenticity, and it being authentically you, and doing business the way that most closely represents your own personal values. It will enable every single one of your relationships that much more. You will also be able to identify whether it's a buyer, a seller, or a strategic partnership. You will be able to identify who aligns with those values and who you best connect with. And so I feel like that underpinning, ability to be authentic with yourself, with your clients, with your team, with the people that you connect with in a strategic manner, or if you're looking to merge or acquire, you absolutely cannot go wrong.
I like that as an ending thought, the authenticity of all of this. Very well said. All right. Well, everyone, I want to thank Rachel for being here. I really enjoyed this conversation. I was looking forward to it, and it definitely met up to the expectations that I had, and I thank you for her time. The other thing that I want to do is, for you, the listener, encourage you to check out the episode description, as I mentioned, but also subscribe. Be sure to subscribe to the podcast. We have episodes that you'll want to be notified of that we release each and every week, so turn on your notifications for that. Also, with the subscription, give us a nice thumbs up, give us a good review, and we'd love to get your input as to what you're thinking of the podcast itself. As for the previous episodes, go check those out. We've interviewed numerous experts in the field, and I'm sure you'll find great insights that relate to marketing, selling, quality services, client onboarding, mindset, just a variety of things to help you, in fact, become the premier accounting firm in your area. Lastly, I do want to mention that with regards to this, if you have any questions, would like to apply these principles in your business, feel free to reach out to us here at Universal Accounting. You can contact us by reaching or calling us at 801-265-3777, or you can also check us out at universalaccounting.com. With that being said, do take care, have a great day, and always remember this: if it is about accounting, it is universal. Take care.